Good morning from Chicago Trader. Bonjour, mesdames et messieurs. Guten Abend, meine Damen und Herren. Buenos dias. This is episode number 2009 today of the Trader Bite. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let me know how I'm coming across, sound-wise, hopefully nice and clear. We'll dive right into the conversion trading pre-market summary sheet. The overall market stance is a mild-ish risk on. We can see that the indices are moving higher. We have breached the 42.32 quarter high, which we did yesterday as well for a bit, and we opened up below. And shockingly, we did not take out the all-time high yesterday during the RTH session. Yeah, this stuff is happening in the overnight session, but needs to happen in the RTH session. So the NASDAQ relatively strong, still trading within the range, whereas the S&P is pushing new all-time highs. The S&P is trading at 42.33 and a quarter. 42.32 and a quarter is the all-time high. We have a multi-distribution profile in the overnight session. The overnight inventory is balanced. We have just as much volume above yesterday's close as we have below it. 24.5 points of range with a high of 42.3675, a low of 42.12 and a quarter, and the point of control remaining at 42.26. Doesn't look like it's going to move before the close, before the cash open, and 192,000 contracts traded so far in this session. So overall, we look at the treasuries, and the treasuries are slightly higher. We look at the indices, and the indices are slightly higher, with the Dow kind of dragging its ass today, unable to take out yesterday's or break away from yesterday's close, therefore almost unchanged on the session. The Dow Minis currently trading plus 7 points or 0.02%. The metals are weak-ish. The gold pushed to 1,900 overnight. Silver is off a fair amount, 29.5 cents. Currently, the latest update is silver is the weakest, down 16.5 cents or 0.58%. So what does that mean overall? Of course, those of you who follow crypto, last night we saw Bitcoin fall about 10%. We saw the entire crypto complex, except for some altcoins, basically taking a bit of a hit, with Ethereum down 10% as well. So that's where that stands. In terms of what's coming out, well, what came out is the EU zoo figure, the German zoo figure, both missed, and the market has some concerns. Has been having some concerns about these ransomware strikes. This morning at approximately 5 a.m. Chicago time, a whole bunch of websites went offline, media sites and things like that. The market had a bit of a slip, and it came back. We'll look at that in a minute. And then for today, we're looking at the main concerns for the market are the what seems like a buildup of another trade war. U.S. President Biden is creating a quote-unquote strike force on trade to make sure that trade is balanced with the U.S. There's this global tax discussion. The U.S. and the Europeans are coming to terms on a tax that would make it would take away the advantage of setting up a company, say in Ireland, to avoid taxes. So the global tax is going to have an impact most likely on earnings in the underlying stocks. Apple's looking for a battery provider for its electronic car. And as I said, the German output numbers disappointed. What's left for today? The U.S. JOLTS numbers at 10 o'clock. And API crude after the close. And inflation out of China this evening. So let's pop on over to the yesterday's Trader Bite and look at what we expected yesterday. So we were opening around the all-time high of 42.29 yesterday, and it really is incredible that this did not happen. But I expected it to push to 42.32 quarter. All-time high on the RTH. It did not, and it started to and immediately fell off. We'll go over that in a second. So the primary scenario is that we would push the high, consolidate the open, and finally squeeze to 40.50. Market was not ready for that. The secondary is push the high to 35, fall right off, and come all the way back to 42.19. 42.19. Here's what actually happened yesterday. So neither one of those worked out. This is what happened in our review segment. We open up at 28.50. This is the bright green line is the open. We open up at 28.50. We push up to 30.50. We have an opening swing high there, and then we drop. Took a while to create the opening swing, and then we dropped through yesterday's Friday's close, pull back to Friday's close right here, and then just continue moving lower. So we break through this 25 area where the low volume node in between the two distributions had taken place, and we remained below there for the rest of the session. Another boring kind of a trading day. We stayed below both VWAPs until later in the session. We extended the IB down. We did take out the overnight low. No, actually, we did not take the overnight low out, which has about a 2 to 3% historical probability. And overall, just a balancing day, very quiet day. If we look at, and then we had a ton of selling on the close. You can see the delta getting hammered by about 14,000 contracts on the close as price climbed up. I don't get it. It's we're still lingering near the all-time highs, and I wanted to show you this real quick. I mean, look at the monthly, right? If we look at the monthly here, this looks like my composite chart, but this is actually the monthly. Let's zoom in, and you look at the monthly, and last month we had basically a formation that clearly indicated that buyers were just not interested in going down into the 4,000 level again. So last month we opened at 41.98 and a quarter, 41.98 and a quarter. That was the opening price last month, and the closing price last month was 42.04, which also marked the MC point of control on the last week of the month, and a clear rejection of prices down into 40.51. So very, very, very clear that the participants here, other than the fact that we've one time framed up from way back here. So this is the break day, this is the initial day or the priming day, and then one time framing up started again on the monthly, telling us that the big picture trend is higher low, higher low. We have a higher low here, and this is going to continue until we take the low of last month, which was 40.51. And so all that effort in May opening at 41.98 and a quarter, and going down to 40.51, about 150 points, and then coming back and finishing right at 4204, just about 5 points above where it opened. And here we are in June, sticking to that all-time high, glued to that all-time high. And I just don't see how the shorts are going to win this battle here. We're just not letting go of those highs, and we are just squeezing higher. The overall range dropping off, and volume was okay last month, but the range is compressing. To me, this is a very, very, very tight squeeze higher. So that's the monthly. And then when we go to the composite, and we look at what we've been doing week to week, so we look at these boxes here. We have an expansion week to the prior week. We have an inside week. Then we have a highly compressed week 2 weeks ago, but higher. And then last week, we have an engulfing week, which finished very strong. And then we have yesterday, which tested down into the 14 and held higher prices again. So to me, it just doesn't look like we're going to get away from testing the 42.40 today, and then eventually push to 42.50, 42.56 as the next key areas. So even though as we push higher, again, we have this negative delta moving lower. So it's a market that's kind of coming into a crawl. And you know what? It is that time of year. You know, the old adage, sell in May, go away. Same thing. So it's to me, it's just not able to get away from this high and what seems like in what seems like a very much a compressed kind of behavior. So what we've done is we've pushed, pull, higher, low. We have a W formation. I talked about this a few weeks ago. We have a W formation that has then started to migrate higher with the point of control beneath us. So quite bullish behavior here, with the next pivot being 42.32 and a quarter, and we're holding at 42.34 and a quarter this morning. So to me, boop, 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 that's what's expected. A continuation higher is very likely. Why? Is it because I'm a permabull? Is it because I care? No, I don't care which way it goes. I prefer down, to be honest with you, because the movement invites a lot of volume, a lot of volatility, and we make more money, and we have the ability to lose more money in higher volatility. But the fact is, the sellers had many chances to drag this thing down, and they just cannot hold on to any territory below 4,200. And if they cannot hold on to any territory below 4,200, and we don't have an excess high, in other words, we haven't pushed high enough to stimulate selling so that it moves away immediately from higher prices, then we haven't found a high. And being the market is a mechanism for discovering prices, it is likely to continue higher, and that's what's expected. And the next level up is 40.50 on a measured move. Above there, we have a free reign all the way up to 42.56 and a quarter, and that's where I'm expecting us to go. Okay, d'accord. So that's where we stand this morning. We're going to take a quick look at just what's going on with the order flow here. As we slide up and down the scale, we see there's a big block at 42.50, just sitting there waiting in the order flow. You could see that about a little over half that block is one order. But other than that, we really don't have much in terms of resting orders all the way down to 4,201. Looking at the overall picture of how the value has migrated, look at the blue segments. Look at the blue segments and how value has migrated. This is an all sessions, by the way. This is an all sessions. Look at the blue. The blue is the value area, and you can see the value tried to migrate lower and failed to do so, and instead moved higher, held in place, and now here we are shifting value higher, right? We've had several chances at cumulative delta to push down. If I zoom into the cumulative delta, you see the yellow line is the very large lots, and the very large lots have been very quiet during the RTH sessions. So if you look at yesterday, here's yesterday, you could see, you could track this dashed yellow line. This is 100 lots or greater, and it's just, there's just very little participation. Yesterday's drop, mostly large lots. That's 10 lots to 99 lots selling, and they did a pretty good job selling, but overall we don't see the very large lots participating in that selling. So to me, it just seems like it's looking like it wants to sell off, but it's really built on a lot of head fakes. This is RTH only on the market profile, built on TPO charts. And what this is showing is, again, if you look at the gray areas, you could see that on the RTH, we easily hold on or shift values higher. We're kind of holding on to these areas around the 4,200. You see that? Around the 4,200, we're just not giving up. We're not giving up territory below here. And in between yesterday and the day before, Friday, we have value building on top of each other. Again, these are TPO charts. Here, let's zoom in, and you could see very much a balanced day yesterday with 10 TPOs across. 10 TPOs across. These numbers tell you how many TPOs are in each region. So that's kind of a big picture view, or a market profile view of what's going on. This, looking at the currencies, holding pattern on the currencies, energy trending up, as we already know. Metals, the gold has been kind of holding in a wide range, kind of swinging back and forth. The notes and the bonds also holding in a wide range, and then the indices holding in a wide range with a slight breakout this morning. So overall, I'm just not seeing how the sellers are going to manage to squeeze prices lower. Let's take a look at what's expected for today so you guys can move on and prepare for your trading day. If you have not, since it's been a while since I plugged EdgeClear shamelessly, if you have not checked out EdgeClear, please take a moment. This is a brokerage I launched in April of 2020, right in the heat of the pandemic. Great time to launch a brokerage. But we've had a ton of support, and I've got to give props to the team, Max Timmons, Ian Blanky, Giancarlo Saracino, and others in our back office. Really love working with these guys. If you are in the market for a futures brokerage, please check out EdgeClear. We'd appreciate your support. We're building on our software, and your support makes more and more possible. You need to clear your trades through a broker, and going through a broker is almost always, in my opinion, better than going direct with an FCM, because we're geared up and resourced to handle active traders. So come on and join us. I know that's very promotional, and I don't do that often, but I want to make sure that the team at EdgeClear is supported by you. So here we are. This is kind of the news. This coincided with the zoo figure a little bit, but I believe it was mainly built on, this move was mainly built on the outage. Market drop, came back up, and we pushed the high, and we're holding steady up here at 42.34. We're building a nice a nice consolidation up here inside bars on the 30-minute. We've kind of been compressing sideways, expecting it to open up here. The overall picture is I'm looking for, and by the way, the overnight inventory is balanced. So to me, it looks like it is likely to open, squeeze down a little bit. Yesterday's high is 30.50, and we're above there, so we're in a gap. Squeeze down to test a 42.32, create a base. There's a potential of pushing down into this 27 area, 27, 26. And then I'm looking for it to squeeze into the measured move high of 40.50 and then potentially attempt to make its way up to 56. 56 is a double measured move. It's got, I believe, 3 or 4 measured move targets between 56 and 60, 42, 56, and 60. That makes that a big target, but I'm going to temper my expectations for range. But that is the ultimate target here. Above us is 56. The secondary scenario is the usual. It is the responsive scenario. Open, push the overnight high, get into the 40, tangle up here, and then finally squeeze lower with an impulse back into the prior day's range, into the 26 overnight point of control, and hold steady. We would have a higher high, higher low, but the market will be taking its time. It is Tuesday, one of the more volatile days of the week, so we could have a runner, and there's a lot compressed in this area here. You can see there's back here, there's a fair amount of volume that's been consolidating here, so we probably do have enough fuel to push into the 56. So those are the key areas we're looking at above. I do not anticipate a strong selling scenario. Scenario 3 would be an open test, drive lower, and if we drive lower, we could push as far as 42.04 to come back into balance. So that's scenario 3 is 42.04. I won't draw it on here just to keep things clear. So that's it. Good luck today, and I'll catch you tomorrow morning. Convergent Trading member, we have our trade talk at 1 p.m. Eastern today. Take care.